Hello, Matt. Randy Kennison with DDSmatch. Just wanted to thank you for being with us today and answering a few questions that we'd like to share with our potential clients and customers. If you would, just please introduce yourself and kind of describe the relationship that DDSmatch has with Blue & Company and the business valuations that you guys prepare for us.
Good morning, Randy, and thank you for the time. I'm Matt Howard with Blue & Company, and I lead our business valuation team. And we do approximately over 100 dental valuations a year for DDSmatch and other dental needs. And we've just really carved out a nice niche in it and have a lot of fun with it. But I am a dental CPA and also an accredited business valuator and a certified valuation analyst. So I have some certain credentials that are just specific to valuation. And our relationship with DDSmatch is we are the third party, non-biased valuator that comes in and gives you a true market test for what your practice is worth at the date of our valuation. So basically we'll be looking at the practice from an industry perspective, trying to help both seller and buyer know what a true fair market value price is for the practice.
Thank you, Matt. Just describe a little bit about the BV and what it entails. I know the first part of the business valuation always has the historical numbers of the practice and as well as the pro forma. And so if you would just, tell us a little bit more about the BV and what it entails.
Certainly. With any small business or personal service company, the biggest noise in the practice for a dental practice would be the owner's noise. And what I mean by that is anything that's inside the practice that is not necessarily operational or is basically something that the owner has decided to do at the practice that doesn't exactly reflect the operations of the practice. So what I mean by that is a lot of times a seller will own the building, and in owning the building, they'll pay themselves a lease rate for that building. And sometimes that isn't a market rate. Sometimes it's a little bit above, sometimes it's a little bit lower. And so what our job in this process is to really help work through the practice financials, the historical financial statements, and just basically help sanitize or normalize the numbers as we see them and as the true operations of the practice are reflected. So our part in the valuation or in the valuation process is we'll collect data, we'll go through the data, we'll enter it into our models. We'll ask very specific questions about that data, about some maybe aberrations in the financial performance over time. Sometimes a dental supply category jumps 10% over a year. We want to really understand everything that's going on inside the practice. And then as we go through it, we would release a draft document for discussion with the seller. And that document would be just completely a conversation piece to talk about the variables that we took into consideration, the market effects that impacted the valuation price, and really just help you understand exactly how we came up with that number. And then after that conversation, take any input from the seller, and then we'll move it to a final, and then that will be your piece to share with any potential buyers as they consider the practice.
That's great, Matt. Hey, Matt, Andy Edmister here, jumping on the call with you. I have a few more questions. Thanks for joining us today. Matt, when would you recommend a dentist start preparing for a sale, and why would you recommend them at that time?
Yeah, great question. And I wish it's a question that a lot more sellers kind of investigated, not the year before they're considering the sale. So some things to take into consideration is knowing yourself and knowing what your aspirations or your goals are for the practice transition. And so what I mean by that is this. is a lot of dentists will wait until they've slowed down some, and we have something called a decreasing revenue stream. And that's where the collections have kind of just slowly over time kind of started to decrease. And that's just basically reflective of the seller, the owner, just kind of wanting to start to slow down. And there's nothing wrong with that if that's a intentional decision you want to make. Unfortunately, when we see that in evaluation, and even when banks see that in our evaluations as they consider financing this for a buyer, it does have to be taken into consideration. And so a decreasing revenue stream in the valuation world is not exactly ideal. More of what we like to see is we like to see a very mature practice that's either consistently growing by inflation or at least steady in the collection perspective. So as you understand who you are and what your goals are, I do think it's an important thing to consider when to sell, and maybe selling before we start decreasing, our output or decreasing our hours or all of that good stuff. So that's the first key. So I would say anywhere from 5, maybe even a little bit over 5 years would be a good time to meet with your DDSmatch broker and start discussing what do you want to do in the future, and what does that maybe look like in your mind from an ideal perspective, taking all the different desires that you have into consideration. They'll be able to help you walk through when may it be a good time to even bring an associate, or maybe when it's a good time to think about selling maybe a couple of years before you thought you would, just so that we don't run into that decreasing revenue stream, which would impact the valuation price.
Okay, that's great advice. So basically to sum it up, keep your foot on the gas until you can get through the valuation and transition the practice to maximize the value of the dentist practice.
Precisely. I couldn't have said it better myself. So basically, yes, trying to minimize the fact that, yes, you want to slow down. However, you also want a good price for your practice. That's obviously, those two things go hand in hand.
Okay, well, thank you. I'm going to move on to another question. The question pertains to purchasing a practice or doing a de novo or startup practice on your own. What do you see as the benefits of each or the cons of each, and what would you recommend to a new dentist client of yours?
Great question, and a question that comes up quite often, actually. So as a person coming out of school, generally speaking, the ideal part of buying a practice is the fact that you're walking into cash flow day one. And what I mean by that is you basically are paying a fair market value price for the practice, and then you're making money, and you're walking into, hopefully a $300, $400, $500 and up $1,000 collection practice, which helps pay your bills day one. That's an obvious benefit of buying a practice. And the problems with starting a practice are this: it's a 3 to sometimes 7-year journey to maturity or average collections of a de novo. So basically what I'm saying is the first year you're probably going to feed the business, as in bring money to the table to keep it going as you build up that collection stream. The second year you might break even or maybe pay yourself a little bit, but definitely not up to industry standards. The third year, between the second and third years, generally during these startups, where we see you making some progress towards paying yourself a reasonable wage. Still probably not what you could get out being an associate at another practice, but you're on your way. And then that 4th, 5th, 6th, maybe up to 7 years will get you hopefully up to average. And average is somewhere around $900,000 of collections, hopefully dropping somewhere about $250,000 to $300,000 bottom line. These are all guesses, and every marketplace is a little bit different. Every geography is a little bit different. But that's just in general.
Okay, well, good answer. Thank you. I'm sure that'll be useful for a lot of people watching. Next question. When would you recommend, or what do you think is the best time for a dentist that maybe is, busier than he wants to be, but he's not sure if he's ready to bring on a new associate? What would a dentist do to say, hey, am I ready or am I not ready to bring on an associate?
Again, a great question and a complicated one sometimes. Every practice has a limited amount of resources, of ops, of time for the staff to not hit overtime. So there's a lot of variables at play here. Typically, we like to see over a $1.2 million collection practice in general. That way that there's plenty of room for an associate to come in, inherit some of that revenue stream, as in hopefully the seller wants to back off a bit and transfer some of their patient base over to the associate. Because let's just look at this from both angles. A seller wants to do an associateship for the benefit of growing and continuing to serve the patient base well. I mean, if you're booked 2 to 3 months out, that's not a very good patient service quality for your patients. So you need to come up with a constructive way to service them quicker and more, and just have a better overall experience for your patients. A lot of times that's where an associate will come in. Therefore, you can basically, help address the backlog and, give the associate, so from the other angle, the associate, give the associate the ability to make money day one, not build a new business inside of a practice. Generally speaking, they might get maybe some sort of guarantee the first year, but you're going to move them to some sort of production or collection-based compensation after the first couple of months, or even maybe after a year at the most. So it's important that it's a formula that doesn't only just work for the seller, but it also makes economic sense to the buyer, who typically buyers these days have quite a bit of student loans that they need to address. So they need to make a certain amount inside the practice. So generally speaking, associateships work great if there's enough collections. If the seller wants to slow down a little bit and maybe back off a day and open up some collections to the associate. And then obviously there's a lot of other variables there, but those are just some general thoughts.
Okay, well, that's great. And so what kind of tools could you offer as part of DDSmatch? What type of tool could you or what could you provide to help a help a dentist decide if they're ready for an associate or not? On an analytical side, just on the numbers and everything you do besides the gut feelings and wanting to slow down.
Yeah, that's also just something that we've seen over and over again coming up is, am I a good candidate for an associateship? Does it make sense for my practice to do this? So what we've come up with is an associate IQ or quotient that basically helps walk systematically through the practice, talk about I think we have about 10 different areas that we look at to make sure that it makes sense for the practice to bring this on. Does it make sense from the owner side, and does it make sense from the associate side? So some things we'll look at is if you only have 3 ops and you want to bring in 2 dentists a day, that doesn't make a lot of sense. So after looking at a bunch of these different variables and intricacies of the practice, we will come up with basically a quotient of how you rate on a scale of 0 to 100 for being a good candidate for having an associate. So we'll walk you through the entire process. Does that answer your question, Andy?
Oh, yeah, I think that's great. And that way they can make an educated decision on, where they're at currently, and if their business can support another dentist. But also, if not, I would assume that maybe it shows them what they would kind of need to do to grow to get to that point.
Exactly. I mean, the last thing that anybody wants, and we run into this occasionally as well, is people jump into associateships and, after a year, the associate goes away. And, we're stuck holding the bag here of all the attorney fees and all the professional fees to get that to happen, and then have that asset, have that partner walk away. That's really tough for a practice, especially if you've grown it significantly and you can't keep up with all the work coming in the door. So it's very important that I think that a owner of a practice really considers a lot of variables, all the variables in play as they consider this pretty major decision that can affect the valuation of the practice and can affect your stress levels as well.
Very good, Matt. Thank you. Randy again. We have another question. We get a lot from dentists that are preparing to sell their practice, and even if they're a few years out, they ask a question: should I invest in any major equipment purchases, or what should I do as far as that goes to make the practice more attractive to a buyer? And what does that do normally to a valuation? Does that help a valuation or not?
Yeah, you're absolutely right. That question comes up quite often. So I'll use a house as an illustration here. There's a couple of different type of equipment upgrades or remodeling or type of stuff that we can take into consideration. But with a house, if you're buying a house, you fully expect the roof to be fully leak-proof, and that's just part of the standard price of the house. It doesn't really add anything if you go through the inspection and find out the roof has all sorts of problems. That needs to be replaced before I pay you the price that you quoted. So with that with that kind of consideration, inside of a dental practice, certain things like X-ray heads, chairs, all these normal standard of care type assets at the practice that you absolutely need. Really, if you redo them a year before selling, it's not really going to make a significant difference in the value of the practice. Some things that would make a significant difference in the practice is, let's say, 2 months before you sell your practice, you add a CEREC machine, or something that's not been in the practice previously that hasn't affected the income of the practice or the collections of the practice. So there's a couple of different things to consider, but really, to fully remodel the practice, unless it really needs it to bring it up to standard of care, if you still got the shag carpet in the practice, that probably needs to go away before you start marketing it. So those types of considerations will bring it up to standard of care, and that could make it, more valuable. However, you're probably not going to get a one-for-one, payback on your investment. So I guess my end-all be-all recommendation is 5 years before the practice sale, unless you're really making your practice digital or doing something that's bringing it up to standard of care, any other significant remodels at that point would probably not be a complete one-for-one return on your money. Does that make sense, Randy?
Yes, that makes great sense, and thank you for that clarification and answer. One other question we'd like to ask you, Matt. Once we kind of get down the road, matching a buyer and seller together and negotiating the asset purchase agreement, there's always the question of asset allocation, and which plays a pretty important part for both sides. Do you mind just maybe touching on that a little bit?
Yeah, so I guess what we're talking about here is, let's say we come up with a price, and the price is $1 million for the practice. The practice price is set, and we've negotiated that. At the end of the day, though, for both parties at play, really even more acutely to the seller, is it's not just the price, it's the overall deal that makes it whether it's a good or bad deal for you. And what I mean by that is this. The $1 million price is great and all. However, it's not about what the price is, it's about what you keep. And obviously what I'm referring to here is taxation. So as you come up with a purchase price and it's an asset sale, inside that sale, you would have two different buckets to place things in that the IRS expects you to fill out on a certain form. And that is how much of the price is going to be assets and how much of the price is going to be goodwill. And those two buckets are very important. For the goodwill side, on the seller side, is that amount is going to be potentially subjected to capital gains. Capital gains is a big deal because the difference between that and ordinary income can be significant. I mean, we can talk about over 10% difference here. That's a big deal for $1 million price. 10% is $100,000. It could be that important. And the asset side is anything that's called an asset in the sale that would be more advantageous to the buyer. And that means they basically can depreciate those assets quicker than goodwill. Goodwill, they can, amortize over 15 years as under current law. So to the seller, goodwill is important. To the buyer, assets are important. It's a little bit more important to a seller though. A seller, that difference between capital gains and ordinary income can be quite significant. So to the buyer, it's a difference of when can I depreciate something? When do I get the tax write-off for this asset or goodwill? It's a difference between 5 years to 15 years. They still get it. It's just a question of when. For a seller, it's a one-time deal. It's either goodwill or it's either assets, and the more that's goodwill is the better for the seller. And really, that is just subject to negotiations. It's not really mandated by the IRS in any way. It's just really based on what are the negotiated rates that we're going to allocate to each bucket.
Hey, what would you advise a young dentist that's been an associate for a couple of years or 2 to 5 years out of school, paying off debt? They came to you say, hey, I'm ready to, I think I'm ready to look into purchasing my first practice. Kind of what would you review with that dentist, and how would you prepare him to be ready to engage with Randy and myself to find him a practice?
Some of the first things first here, and that is, have you spent the time clinically to get your hand speed up, to make sure that you can, whatever you're looking at buying, can you actually do, or can you document that you can do that in that new practice? So something that the bank will be looking at is, have they been able to produce at the levels of the practice that they're buying? So that's one important element. Second important element is basically taking a look at what does their world look like? Have they, gotten a couple years out of school? Have they been able to, create some sort of emergency fund? Do they have some sort of margin in their life? That sounds very logical, but a lot of times a buyer is not a good candidate because they don't have any kind of safety net in their life. So the third thing that I would talk about is, do you know what you're looking for? Do you know a geography? Have you really studied what area you want to be in and what that practice might look like? Having a clear direction and intentionality about the practice that you're buying, I think, is an important thing for them to address to a broker at DDSmatch, because they really need to know that you're fully vested in buying in a certain area for a specific purpose with a certain clinical skill set. Does that answer your question, Andy?
Yeah, absolutely. I mean, I think that's great. It's just, I think there's a lot of young dentists out there that just kind of on the edge. Am I ready? Or, it's scary opening, starting your own business.
No doubt about it. I walk through maybe, 20 buyers a year, and some of the same elements that you're discussing here come up often, and it can be a terrifying thing. You just need a really good board of directors to walk you through it. And what I mean by that, I mean a great CPA like myself and a great attorney to help you kind of understand the logistics of the transaction and how to structure it. But really beyond that, if you got the right people on your team, as advisors, we've been through this 100+ times. Just helping you through that is part of what we do.
Well, thank you very much. And again, we appreciate you taking the time out today. I mean, you've been a huge partner and a huge help for not only us, but especially for our clients. So thank you very much, Matt.
Thank you. This has been a great conversation and great questions. And I think these are key elements to any transaction, as these will come up at some point in the process. It's nice to kind of have a heads up for your sellers or even the buyers out there to kind of understand the dynamics at play. Again, DDSmatch is a great brokerage. They really walk their clients through everything, and it's an open process, and they invite your advisors in to help you through it. I'm a big fan.